Hello and welcome to another episode of Daily Market Mastery with me, Christian Rauchenwald, on this Thursday. I hope you all had a great week. As always, before we jump into the markets, let's get the usual disclaimer out of the way first. Everything that I share in this live stream / video is my personal opinion and in no way financial or professional advice of any kind. You should always do your own research, consult certified professionals, draw your own conclusions, and make your own decisions. Besides that, all the tools that I'm using, so the broker, the charting software, the strategy I'm following, and so on, are all linked in the video description down below. And the one thing I truly recommend, if you haven't done so, is check out the Elliott Wave principle, which you can read online for free, so as a PDF on your screen when you use the link in the description down below. With that, we can actually jump, or just need to switch the app, 1 second. So into my portfolio, we can see we have a slightly green start into the day, mostly due to GameStop. Which is also, I guess, where we're going to start today. Yeah, like I have to admit, so it always hurts to be wrong, but in this case, being wrong still makes making money, so not as bad. I honestly thought that based on the pattern that we would have finished our third wave up here and would now get to see at least the retracement to the 38.2% line or level. However, turns out that apparently I was wrong with that assumption, unless this whole thing here somehow turns into a flat correction. So that option would theoretically still be on the table. Not saying that it's a likely scenario, but basically then we would be looking at this and would, however, expect, yeah, like to still go down to the 38.2% retracement. Not considering that this is the likely scenario. We're going to circle back to GameStop in a minute and try to update our labeling and see where I got it wrong, or if maybe this is indeed a flat correction. We'll see, I guess, in 5 minutes once the markets open, which way it tends to go. So if it were a flat correction, we definitely would need to see the downwards movement now. If we start to get another push up, then that option would be completely off the table. Now, for my position, that doesn't, I mean, it means that I might end up getting my shares called away at 30. So as we know, in this portfolio, I hold by now 600 shares in total. However, against those 600 shares, we also have 6 covered calls with an expiration in January at a $30 strike price. So while not too bad, because we still would book a profit, if we now actually rally up higher, it means if we now rally up higher, it means missing out on some additional potential profits that we could make otherwise, which would be a pity. Now, obviously, considering that the expiration for my options is actually January 17th, we have it here, so that should be the expiration. That one we can actually remove, because now we can keep it for now, because our assumption was that we get a wave 4 and then our wave 5. And considering the expiration date of the option, it's still possible, depending on how far that move goes, that we then get our retracement and that it still plays out properly. However, once we go above 30, we also have to consider that whoever bought the call options from me could exercise them at any moment. I mean, they could also exercise them out of the money, but it just wouldn't make sense. Which means we'll have to consider getting the shares called away. I honestly, so mixed feelings. So on one hand, we still book a decent profit. On the other hand, we might miss out on some profit with those 600 shares. Thankfully, I still hold a bunch of shares in Computershare directly. So anyway, so again said, we'll circle back to GameStop in a minute. We'll quickly just look at the other holdings in our portfolio. If there is something important, but I don't think there is anything important. So Barnes & Noble Education, still fine. We see our position is at a small loss. However, we could get out of the position either if we break the 880 here, or worst case, if we break the 831 here. So our risk is relatively limited. Our position is also not super big, so can live with it either way. However, so far, the whole pattern here with 5 waves up, 3 waves down actually followed the rules and guidelines of Elliott Wave Theory quite nicely. The question will just be, will this here be, as it's marked now, wave 1, 2, and potential wave 3? Or is this somehow 3 waves, followed by another 3 waves further down, in which case we would have to consider the 78.6% retracement. Personally, considering how small our position is, we see even if we go down here, would only have a pending $150 loss. I probably will not get out at this level either, but I would then hold to see if we get our bounce at the 78.6% retracement level. However, Overall, for Barnes & Noble Educational, I'm still confident that the pattern is 1, 2, 3, 4, 5 for a wave 1, then ABC for a wave 2, corrective wave, and that we're now in the next impulsive pattern upwards. Now, again, might be proven wrong here. Nobody is always right, but it doesn't matter if we're always right. We just have to be either right more often than we're wrong, or our winners have to be substantially bigger than our losers. Moving on, grab. Today, retracing a little bit. We broke the 100% expansion here. Our call option, we only hold one Leaps call option here with $50 risk, and that's now at $100-something profit, or I guess, yeah, we'll have to wait another minute for the markets to open to get the accurate rates, but it should be around $100, 100% profit right now, or 200% profit right now, actually. Making me regret that I only dumped $50 into this. It's kind of like, okay, it looks like we have a 1-2 pattern here. Yeah, we still will need to wait until we break 781 eventually to be really completely out of the woods and have our confirmation that we are looking at 1-2 and wave 3 instead of looking at only a corrective pattern like A, B, and C before we go further down. Overall, based on the strong movement, I'm actually relatively confident that this will turn out to be in some form 1, 2, 3. Targets would be here, as we already discussed, 942, 1088 for wave 3. Then we would get wave 4. Yeah, we get the alert for GameStop now that we broke the 2879. 1 second, yeah, and then wave 4 and then wave 5 further up. GameStop, yeah, so it actually triggered now on the way down. So yeah, we'll see that. So I'll clear the alert history. So that was based on the previous high here. Yeah, one thing worth mentioning for Grab, we're looking at a weekly chart. So the development here is obviously very, very slow in terms of new candles on the chart, but also our option expires only in January 26. So here, so we still have a lot of time for this to play out. Also a lot of time for it to be, or for it to change into an A, or to turn out to be ABC followed by further retracement. But again, considering the strong movement that we see here, I don't think that's the case. Moving on, immersion, yeah, unchanged, still waiting position to either confirm that the correction as an ABC move finished here on the 61.8% retracement level, and also the 100% expansion for wave ABC, or so like proving right that, so either to get proven right, then we see some upwards movement, or to get proven wrong and we see further downwards movement. Similar to Barnes & Noble Education Inc., we don't really care that much, because even if we're wrong and we would, so if we're partially wrong and we first hit the 78.6 retracement, we only look at $150 pending loss, our position is not that big. So we'll keep an eye on it and adjust as needed, but overall I don't think that we'll get out of this unless we break the low here at 594, and even at this point we're looking at $200 loss that we would lock in, so also not too much. Costs, do we get a chart? Yes, so same thing, like I don't know how long we've already been waiting. We either need to break the bottom here at 652 or the top here at 879 to have a little bit of additional confirmation of either correction finished, free wave move, A, B, C, and this is the next impulsive pattern, although I'm sure it's also still part of the correction, to be honest, yeah. Or break to the bottom to confirm correction not finished, and we would consider the 61.8 retracement as the next potential turnaround level. Our position here is a little bigger, but again, same thing. We're not talking about fortunes here. Even down here, we would look at a maybe $470 pending loss that we can also stomach, yeah. And moving on, NEO, we slowly increased our position, considering, so at first we entered here, exited here, and then we started to buy 1 or 2 shares here, and then a little bit here, and then actually more when we touched the 78.6 retracement. Visually, this would be an almost perfect corrective pattern. There is still pattern-wise the chance to get another push down. But if we consider Kennedy channeling technique, then we have a perfect turnaround point. If we consider that we have here the 78.6% retracement level, which is probably the 4th common retracement level where basically corrections turn around and the upwards trend or the perceiving or previous trend is resumed. We're going to have to wait and see how this plays out. Our position is also not super huge, so we see even if we would have to jump ship because the pattern becomes invalid at 368, we'd be looking at like $75 loss here. Overall, however, I expect that the more likely scenario is from here, we get to see our next wave up, and our profit targets would be 681 to 904. So our risk-reward ratio here is quite great because we stand to lose around $75, maybe $80, whereas we, on the other hand, stand to make between $250 $430 to $450 profit if you're right. Yeah, so still, in my opinion, not the worst entries right now. One could wait because, again, I mean, visually we would potentially, either this is a 3-wave corrective pattern, we would have to zoom in further to try to confirm that, or if it's a 5-wave pattern, it would obviously be 1, 2, 3, 4, and then we would still miss the wave 5 push. So there is a chance that we still retrace a little bit further and get better entries, but considering that we only entered with, how many shares do we hold now in NEO? 100 shares, yeah. Yeah, it doesn't make a huge difference if we enter here or we enter here, yeah. And Novavax, yeah, that's gonna be the like sorrow child of mine. I think that long term it's still bullish. It's like relatively clear 5 waves, 3 waves, 5 waves, and now that correction is just a huge mess. I called this one wrong originally based on the assumption that we have A, B, C and finished here. Yeah, kind of ignored that we didn't bounce on one of the retracement levels, which we don't always have to, but often enough to. Whereas it then turned out my position or my call option got into profit, and then that obviously killed it for now. Now visually we have a very clear indicator, or clear, I mean, we have multiple target areas and forecasted areas that overlap in this area here, which would point towards this being now the end of the correction. Sadly, for my options that expire on January 17th, that might not be early enough unless we really get a strong 5th wave. Which is not, yeah, I mean, not unlikely, but also not too likely considering how strong the 3rd wave was, and the 3rd wave is usually the strongest. But we'll just hold on to those positions. We don't increase them, and we'll just see how it plays out. Outside of that, we actually can circle back to GameStop now and wonder like what the best play is here. I'm actually curious. So as said, we have now the, I'm gonna take a sip. Don't forget to hydrate, guys. So I could obviously close out the calls, but if I do that, as we can see, I'd have to, does it show the whole amount? No, it doesn't. So 550. So I'd have to basically, yeah, violate my margin requirements. So I'm not sure I can do that in a move. And again, I would have to basically book that $350 loss. But overall, I have to spend more cash because I have to buy back the entire option, and I already spent the premium to get more shares. So now the question would be, is there a way, do we now have GameStop here? 1 second, GME, there we go, GME stock, yeah. So the question would now be, is there a way to actually, so how is the premium right now? Obviously premium for 1 day is very low. Only if I roll them out further could I roll them into a profit, which still would mean, so rolling options also means taking a loss, basically. It means realizing this loss. So just as an example, we now have the January 17th. So January 17th, $30 calls. So if we say we buy back the $30 calls, and at the same time we, for example, go to April 17th and sell the, I mean, we could, that won't help, yeah. So we have to then go out in time, and then we could either sell the same calls, which doesn't make sense, or we could sell higher calls. We could sell the $40 calls, yeah. So if we do that for the 6 calls that we have, we actually would get a total of $150 in cash, because we pay 570, no, that's delta, sorry, obviously paying attention. So we pay $555 for each option to buy it back. And on the other hand, we get a little bit more, so between $555 and $605 for the new options, but it also adds 1 month. On the other hand, however, that would also mean that if until then we stay above 40 or below 40, the options would expire worthless, and we still hold the 600 shares. But on the other hand, it also adds a huge extra amount of time, because as you can see, we go then from 57 days that we have to wait to 147 days. So, and the only thing would be in that case that we basically could secure an extra an extra $6,000 in profit if GameStop rallies above 40. If it stays below 40, we just ensure that in 147 days we still have our 600 shares. So I'm not sure if that's a play worth making. I don't think there is any other option right now. So like everything else would go hand in hand with realizing the loss. So the best other play might be, if I don't want to extend it to basically reduce the cost, would be, instead of just buying back the $30 calls, which again would cost around $3,000, I could simultaneously sell the $35 calls, which then brings down the cost to only a couple hundred, and already means that we would book, so we stay at the same expiration date, and we would book an additional $500 per option, so $3,000 in total, if GameStop rallies above 35 instead of above 30. Yeah? So I think the right thing to do, other than taking another sip of Apfelschorle, will be, first of all, to consult our Magic 8-Ball, and second of all, then to update our labeling and see where we made a mistake here. Yeah. Obviously, don't forget, feel free to share in the chat what you think where GameStop is going and why. And yeah, so if we update our labeling, we can actually first already create an alternative analysis based on empty. And here we can just add the auto labeling. Yeah, so for now. So now the auto labeling would suggest, yeah, I'm zooming the wrong way. The auto labeling would suggest that we indeed are looking at wave 1, wave 2, and are currently in the third wave here, and have here 1, 2, 3, yeah, so 4, but a very short fourth wave, so it actually overlaps with my labeling, and are currently in the fifth wave. However, if the auto labeling would be true, we still would be fine potentially, because then what happens would be we would reach this wave 3 target. Wrong, we need a retracement. We would hit our wave 3 target, and then from the wave 3 target, we would retrace down below 30 again. And if that drags out long enough before we get our fifth wave, we would actually still have our option expire worthless if they don't get called away when we break the $30 mark. Yeah, we're going to close that, so we don't want to save that. So we're still going to analyze. Let's actually take this from the top. So hopefully I didn't break the chart now. So do we get anything happening here? Maybe I didn't have the chart selected. Why you not update? Hello, Motive Wave. And where did my watch list go? Ah, because I double clicked it, yeah. So let's switch back and forth. Let's see if that helps. Still says monthly, but it's not. Now the drop down doesn't. Okay, we're gonna restart Motive Wave real quick. We don't want to save the alternate. It was just to quickly check what's going on or what could potentially be going on. And again, fire up Motive Wave. So personally, I'm honestly, I'm a little bit torn. Obviously, considering that I also hold extra shares in computer share and so on, I would be happy if GameStop goes further up. On the other hand, giving back 600 shares, even though it's at a profit, still not something that I'm going to be excited about. So again, let's try to see if we can get out here, although it will probably be chaotic in terms of its labeling. Okay, so we're going to still back on the daily chart here, zoom in, and we're going to still create a new alternate just to look at it from the monthly, or from the bigger perspective, starting with monthly. So with GameStop long-term chart, the issue is, I covered it actually years ago when all of this here started. When we apply Elliott Wave Theory, there are like, two considerations. One is we could pick this as our starting point because it's the lowest recent point in quotes, considering that we're on a monthly chart. However, very often companies go public towards the end of their fifth wave. So if we have a 1, 2, 3, 4, 5, this would very often be the area where companies go public, which would translate to the potential that this is actually maybe not the full fourth wave, but this is actually just the fifth wave. That is basically previous history going public and then still push of enthusiasm up, yeah. And in that case, then it wouldn't matter much. Like then we get lower here. Also, but however, it also doesn't change very much because the only thing that it gives us is that we can label this corrective pattern and say, okay, this is potentially, I mean, it's a very complex corrective pattern for sure, and it exceeds our usual expectations a little bit, but very likely we have 1, 2, 3, 4, 5, so 5 waves down here, and we should also have 1, 2, 3, 4, 5 in some way or till here. For a big 3-wave corrective pattern or a combination of corrective patterns, doesn't really matter much. But the bigger point is, as a result, so probably we should label it from here because we also don't gain any benefit under the assumption that this is the 5th wave, so pre-IPO data that we don't have, and then 5th wave. Yeah. If we label it from here, we probably can already jump into a weekly chart. Already it's going to add a ton of candles, and then we can first try the auto labeling, but try it from basically March. March 29th, March 22nd. Yeah, so March 22nd, auto labeling, and we changed it, not that, that here. So we say, and it was what? Oh, it already has the right starting point anyway. Yeah, but so that was what, 2020. So 2020, 22nd. Yeah, that's gonna be where we label it from. And then auto labeling would suggest this, yeah. Although that spike here, I'm gonna check on Google real quick, GME, July 19th. Did we have that spike? I don't think that spike happened there. Maybe it did, yeah, or not, July 2022, yeah, so. Open, close, yeah, so we're around 30, so considering for splits, so that's here's a fluke. That here is a fluke, okay, so yeah, nothing we can do about that other than try to clear the local data and see if we maybe get proper data. Oh yeah, there we go, yeah, so and then it changes to this. Now, if we look at that, I mean, since all of this started years ago, also I've been getting better with Elliott Wave Theory. But yeah, so if that is indeed wave 1, as auto labeling suggests, then we would have an almost 50% retracement here. The usual or most common retracement levels that we have when we apply Elliott Wave Theory are 38.2, 61.8, followed by 50, followed by 78.6, and then followed by 21.4. And in this case, we almost retrace 50% here. If that labeling would be accurate, then we would now expect obviously stronger upwards movement because we would be in the 3rd wave. We can already see that the auto labeling has already some ideas about how this can go. I'm not sure if the auto labeling here is correct. Yeah. Now, the other option, if we add an extension, so because this would be our wave 1, we basically could also disagree with the auto labeling and could theoretically, although in a time analysis it would be super weird, so could basically consider it like that. Yeah, so and if that were the case, our profit targets would be between 207.62 and 1,357 for the 5th wave. Yeah? If we use Kennedy channeling technique, oh, that's also something we can do, obviously. Yeah? So if we use Kennedy channeling technique, then we would get basically our so-called base channel. We have our breakout from the base channel. Here we actually are going to hide everything but the 500 levels, so it's not getting too cluttered on the chart. 500 stays. So just to mark that that's our potential wave 3 target. So again, base channel, wave 1, 2, we have a breakout which indicates wave 3. Then we have our so-called acceleration channel by taking point 1, whatever high point we have. So if we are still here, then we would pick this, we will parallel through 2, and we would wait for a breakout to the bottom. That doesn't happen here, so we move on to this high and so on until we eventually reach this high, parallel again through 2. And when we have that breakout here, then we are, in quotes, relatively certain that we are looking at the fourth wave. Now the fourth wave is a little bit hard, or yeah, which gives us then our deceleration trend line, which in this case is going to be a little bit wrong because it would indicate this here. Yeah, so which might still be the case. One second. So if we have our wave 4 here and our wave 2 with a parallel through point 3, and we extend that, I know it's getting cluttered on the chart. I'm going to zoom in a little bit. So if we have our base channel here, yeah, so wave 1, wave 2, and we have our breakout, which indicates that we are now in wave 3, then followed by that, we can use our so-called acceleration channel. Again, we just pick starting point 1 and then whatever high point we have with a parallel through 2 until we get a breakout to the bottom. Now that channel is this one here, and we can see the breakout to the bottom happens here, which indicates that we are in wave 4. And so needs to have candles closing outside, yeah. Then we can connect the top, so point 3 and the top with a trend line, and we get our deceleration trend line. And once we have the breakout from here, we get in quotes semi-confirmation that we are looking at wave 5. There's an additional piece of that puzzle. Very often wave 4 will retrace to the top or median of the base channel. It doesn't do that, but then it happens to be often enough that it basically, if we duplicate the channel or the distance of the channel, that it retraces to that top or that median. Yeah, I don't know why it happens often enough. Yeah, but this would actually point towards, we'll have to remove that pattern here, and we'll actually also have to remove our expansion here, because this would actually point towards the following. So if we use Kennedy channeling technique, we get the following situation, that it's actually saying, okay, hey, look here. We have our wave 3, wave 4, and wave 5. Although wave 5 does not hit the profit targets that we would expect here. That's an important aspect, yeah. But based on Kennedy channeling technique, once we have our, I'm going to delete the base channel and the acceleration channel. That's the acceleration channel. So then we can take our point 2, our potential point 4, and a parallel through point 3 up. So point 4. And a parallel through point 3, and we get our target areas, because wave 5 should touch the median or the top of this channel, which means from a timing perspective looks better. Yeah, not like this, but would actually be this here. Although it would mean that we have a truncated fifth wave. Yeah, so then that would be the orthodox end of that 5-wave impulse. Which then, however, also means that then from here, we basically would have a big wave 1. Yeah, it doesn't let me set it. Okay, let's go the other way around. Yeah, standard tool, remove that. Which would potentially mean that this here is actually wave 1 and wave 2, and we are right now in the beginning of wave 3. Yeah. Now let's see, I'm gonna manually decompose that again, because the auto labeling would decompose everything. So again, I think this, and yeah, so as said, we have on one hand, we turn around in the 561.8 retracement in wave 3, we get wave 4, we get wave 5. Now, if we now look at the retracement, considering the orthodox point, we actually retrace 38.2% and just briefly break it, which is 38.2 and 61.8 are the more common retracement levels. Yeah, so we're also gonna hide the rest. So 38.2 and 50 stay on the chart in this case. Yeah, or yeah, 50 actually doesn't need to be on the chart. Okay, which means that right now, did we already go higher here? Here we had 80, and here the high was pre-split 87. Okay. But we didn't have a 3-wave move here. We clearly had a 5-wave move here. Okay. So, but that would indicate that we're here potentially in a 3rd wave. Now, time relationship, that's going to be something I'm not really good at. But if we say wave 1 versus wave 2, oh, that's on the bigger scale. I don't, oh no, do I want the bigger scale? Oh, there we don't get 2 versus 4, 5 versus 1. No, all of that doesn't help. Okay. Time relationship. So we had here 2020 to 21. So we had here 1 year, and then here we had 3 years. That actually kind of fits. Yeah. Hi Akashi, great to have you here. How are you doing? How's your day going? And yeah, so now we have to focus on trying to label this. I can already take away from previous streams that I'm struggling with labeling this area, but we're going to focus on the area before. So we're going to zoom in and label from point 2. Okay, that might not be sufficient yet. So daily chart it is. And let's see if we have maybe the same thing play out here. So if we pick our wave 1, 2, clearly we have a move up, we have a move down, and then we actually need a few more retracement levels here. So that would be 38.2. So that would be 938, 1038, and let's also add 11, and then 61.8. So it would be 961.8, 1061.8, and 11. We usually don't need those because we don't go that high, and it's a tricky choice between the 961.8 that we break and what do we touch here? How high do we go? 80, and here we have already 81, so I would actually settle for the 9 in this case. Doesn't matter which one we pick in quotes, yeah, so it's just that those levels are usually the most common one where a third wave terminates is the 261.8% extension level from wave 1 in my experience, and the other levels are just additional ones that we might hit, so which means we might have this situation here. We're gonna apply Kennedy channeling technique again, yeah, to see if we get to the same conclusion. So if we take our starting point, point 2, parallel through point 1, we have our base channel, we have a breakout from here, yeah. Then that might actually already be tricky, so because then we would have to take this high point, for example, parallel through point 2, and see if we have a candle that closes outside, which we don't. So here we don't. We make a new high, which means we move on to this candle. Again, parallel through point 2, we don't have a breakout to the bottom. So only once we're here and we draw a parallel through point 2, do we get a breakout to the bottom. So that indicates that this here is wave 1, 2, 3, and now wave 4, again, doesn't touch the base channel, but again, if we duplicate the base channel, it touches the top of the duplicate, which gives us also additionally our deceleration trend line. I'm going to draw this a little further so I can see the candles here better. Would look like this. Up. And we have the breakout here, which indicates that we're in the 5th wave. And even on the daily chart with naked eye, we can see that we have a wave 1, 2, or potential wave 1, 2, 3, 4, 5 here. Now, if we use the destination channel, so our point 2, so not that big one, but then 1, 2, 3, 4, we take our point 2, our point 4, and a parallel through point 3, then again, we expect that the 5th wave touches the median or the top of this channel, which it does here, which means very likely, at least this part here can be labeled as 1, where's the low? 10, 70, that is the low, 3, 4, and obviously the 5 jumps now somewhere else where it shouldn't go up. Yeah, 5 should actually be here, yeah, which is not the same as this here, yeah. So which means this is only reset the zoom. So which means this would be basically again the case where we then are following or followed by retracing this 5-wave move. And in this case, we actually retrace a little bit more than 68.2%. Again, the most common retracement levels, 38.2, 61.8, followed by 50, followed by 78.6, followed by 21.4. That's not visible here. Now we'll have to zoom out again on the weekly chart, I think we were, yeah. Because we also have a rule of alternation. Although, let's double check here. Here we have our potential wave 1. There we already, okay, so here we have 5 waves for our wave 1. We have our wave 2. Our wave 2 retraces 38.2%. And then we still are in the bigger wave 3, so we don't have the rule of alternation on that smaller scale yet, but it will be relevant later on the bigger scale. So far, so good. And okay, so we have our 5 waves up. The big question is now, what kind of correction do we have here? Again, the correction probably doesn't follow the usual, not guidelines, but the usual levels that I would expect So since we have very, very strong moves, as we can see, we would expect, if this is the correction, so as A, B, and C, so a three-wave move, then we would actually expect to reach the $15 mark, which was a little bit confusing the last couple of weeks. However, and we don't perfectly bounce. I mean, actually, yeah, we still bounce at 61.8 because the candle closes outside of it, even though we opened below, retraced further and went up. So that gives us the assumption that within that third wave, we right now have wave 1, wave 2, and are right now in this, I don't know where the big third wave marker is right now, so let's see if we can connect it. That third wave, let's put it here on that cross, and then this third wave would be basically finishing here, which means that, however, would also then give us this here. That we can remove because we already, that I didn't want to remove. That I want to remove, and then that I want to remove, and then the rest, the deceleration line we don't need anymore. And then basically we could assume that this plays out like this, and here we retrace 61.8, which means if this plays out like this, just to get a rough estimate for the wave pattern, we would here expect to, for example, behave like this. And then we get our fifth wave, which again, the fifth wave we already had marked as the, where are you? Where are you now? Up here. Okay, let's move you here, and then like this, yeah. So there you complain if you would go down that far. Okay, couldn't be, then that might be one of the cases where we actually would have a 21.4% retracement. I know I'm getting ahead of myself here with this, yeah, but we're trying to figure out what would be the most likely move to happen, or pattern, as long as there is a valid pattern. Because if this is indeed a wave, so we are within the third wave based on the bigger pattern, and then within that third wave, we have 5 waves finished up with a truncated fifth wave. We have a retracement down to 61.8, although that candle breaks it but closes above it, so counts for me. And which would then point that from here on forward, we basically are in the third wave of this bigger third wave. Yeah, so far so good. And which means we're gonna get rid of a few things that are long-term and otherwise would, no, that I didn't want to get rid of. That's the retracement we want to get rid of. We also want to get rid of for now, no, that can stay on the chart. Here, that retracement just keeps the 61.8, so we don't have too much clutter on the chart. And we can zoom it back to here because that's where we think it finished. And then we can actually, before we zoom in further, view, reset spacing. Yeah, then it becomes tricky to label it from here on forward. We're gonna let the auto labeling give it a try. So from August 5th, 20, what do we have? 2024, August 4th, actually, in that case. Let's see what it does. So it would label this as a free wave move, which would be not as nice, because if this is a free wave move, I mean, it would be good for my options, to be honest, because then we would expect, if that were a free wave move, we would expect it to play out like this. So that basically we, yeah, finish ideally around here, but potentially up till here, and then are followed by 5 waves further down. But that also wouldn't fit with the assumption that we are in that third wave. Then I would have made, then basically I would be wrong with my assumption that the correction is done here, but then this would only be part of the correction, followed by another part of the correction, and followed by another corrective push down, which would then again bring the $15 area on the table, yeah, which is like super ridiculous. But okay, I mean, so far we actually were quite able, using Kennedy channeling technique mostly, to narrow down what's going on. But we still are going to have trouble, so get rid of the auto labeling to label that mess moving forward. So if we zoom in further, double the candles, double the information. By the way, as usual, don't forget, like, subscribe, enable notifications, especially your thumbs up helps me a lot. So smash that thumbs up button. So yeah, the tricky part, to be fair, with this area moving forward is not necessarily the part in the end here, because this here we can label, even though I have to admit that I potentially got the correction here wrong, unless it turns into a flat correction as mentioned. But the tricky part is this first part here, because we have a very, very strong move up, then it narrows down and then basically goes like this, followed by that weird corrective move, so small move, correction, so counter move, and then strong move. And then we have 5 waves here, correction, 5 waves here. So that technically makes this part here a 3-wave move. Although if we consider it in the bigger picture, it could theoretically be, although let's see if it would violate any rules if we say that. So if this would be, yeah, not like, yeah, of course couldn't be an impulse, because tools would need to be a diagonal. If it's a diagonal, it could only be a leading diagonal, because it would have to be the first wave out of the 5 waves that will make up the entire 5th wave. So it would need to be, it could be a contracting diagonal actually, yeah. So a leading diagonal, sorry for that, yeah. So that would be, yeah, that might actually fit, yeah. So cheat sheet. 1 second. So if you're curious, there's the book about Elliott Wave Theory, and once you have a grasp of the overall patterns, there's also this 1-page PDF that has all the patterns on 1 page. But again, without reading the book, that PDF is pretty much just confusing. So if we are a 3rd wave always, so we assume we are in a 3rd wave, and a 3rd wave always subdivides into an impulse. An impulse always subdivides into 5 waves. So, and the first wave would subdivide into another impulse in 93% of the cases, or into a leading diagonal in 7% of the cases. A leading diagonal has exactly this look to it usually. So long move, shorter move, long move, shorter move, long move, or yeah, like still shorter move. And in a leading diagonal, it would be tricky, but we would need to have basically a 1, 2, 3, 4, 5. So an impulse here, any kind of corrective pattern, another impulse, any kind of corrective pattern, and another impulse. At least that part I can confirm that we have an impulse and a corrective pattern here. There we also have a corrective pattern, even though it might be a combination that I might not be able to label properly. But the tricky part is this indeed also an impulsive pattern or not? Yeah. So, but overall, I would say it tends to point toward this being the case. Now, where do you come from that we don't need anymore? Yeah, which would point towards, again, this being the next. So we are in the 3rd wave, and in the 3rd wave, that might be the next wave 1, and then down here or down here. So orthodox end. So considering this, might actually look at this like that. So that is our wave 2. Or again, I have to do this like this. So otherwise it connects the wrong endpoints. So this would be our wave 1. And then we would have our wave 2 potentially till here as orthodox end. And we would now be in this 3rd wave as well, which would give us, again, different profit targets. The smallest one being the one that we are currently dancing around, so 29 to 31.5. Zooming in again, yeah. So don't want to move that, but I need to move this. Then we also have 5 waves, 1, 2, either 3, 4, 5. Most likely because here we have a corrective move downwards. Although Kennedy channeling technique might be, yeah, that we would need to zoom in further, so it's going to get tricky here. So, oh yeah, that might check out. So if we use Kennedy channeling technique, it's like no guarantees with that technique. It's just a tool to help, yeah. So if we take our starting wave here, then we have our breakout for wave 3. And then I'm not going to bother to add additional channels, I'll just change this one. So we keep our point 1, whatever high point we have, our parallel through point 2, and we need a breakout to the bottom, which we parallel through point 2. Breakout, so candle that closes outside, not happening here. One could argue, yeah. But here we definitely have it happening, which means we then would get our deceleration trend line. That here would be super steep, and we already have it here. So which means then we could take our point 1, no, our point 2, sorry, point 2, what we believe to be point 4, which would be this point, and then we actually get too steep of an angle here. However, if we consider this here, then we actually hit our destination target here. So 1, 2, 3, 4, 5. But then we also retrace here 78.6% or not. So not that it's bad, but yeah, almost exactly 78.6%. However, then this, let's see how this checks out. If we get some additional information, that would need to be wave A, wave B, and then here we have our maximum target at 161. Yeah, so it's still within the parameters. So which means the next wave pattern would likely be this one here. So with wave 1, wave 2, wave 3, wave 4, and wave up, and wave 5. That's now so small that it doesn't show it here anymore. Yeah, so it's just would need to zoom in on a lower time frame, which would also mean that on the other hand, we'd have the next wave 1, wave 2, and would again be in wave 3 somewhere. Okay, so maybe we are getting somewhere here. Yeah, so again, an extension for this here. So that would be the next wave 1, 2 potentially. And okay, so we could already disable those here. And here we can disable also the 100% levels. So we would expect actually that, unless we made a mistake along the way, but we would expect that this third wave here reaches the levels here, 32.16 to 33.81, which means it might make sense for me, if not to, although that's short term, after that we would anyway, so if it plays out like this, we would anyway then retrace this entire move here. So bring it, again, go below 30. So, and worst case, I get my shares in quotes call away, and I sell cash secured puts below or at 30 or below again. So basically I just collect extra premium instead of taking a loss. So that's not too bad of an assumption. That here moves further, and that here would go here, yeah. So, yeah. Which then brings us to the next pattern, which is then in here. We're not gonna make our way much closer in quotes, but yeah. Let's see. Here let's do it with Kennedy channeling technique. So let's see what that tells us. So again, we would have our low point, which is our starting point. We have then the next low point here. So they are not identical. Here we have 2030, and here we have 2035. So that's our base channel. We have the breakout from here, which is then our acceleration channel. And then we take our point 1 as set, so the high point, and then whatever high point we have. So if we would still be back in October, we would pick this high point, parallel through point 2, and then we would see if we get a new high like here, we move our high point, again adjust the parallel. If we don't get a new high point, we wait for a break to the bottom. Yeah, so we continue, and then even here we don't break that acceleration channel, which means we're still in wave 3 according to Kennedy channeling technique. Then the next high that we get here, again update to make sure that we go parallel through our point 2. And we still don't close outside of this, yeah. And then the next high that we get here, update 2.2. So we still should be in the third wave here, which is quite surprising. So based on Kennedy channeling technique, I'm gonna remove that retracement for now because it's not relevant right now. So it actually looks like I made a mistake in my labeling and the assumption of that we already have our 5 waves finished, so here, and that we're retracing now. But it looks like we are still in this here. So if we take the low point, and then that's our point 1, that's our point 2, that's our, and our point 3 is not even, oh, come on. Our point 3 isn't even relevant now. Now we also, 1 second, we'll need to add another extension here, because if that's our next wave 1, 2, then we get another extension. I mean, we bounce it almost on the dot. We miss it by 2 cents here. And visually, we have a 1, 2, 3, 4, 5 in here for wave 1, wave 2. Then we have a 1, 2, 3, 4, 5 in here for wave 3, and then wave 4. And now we're actually getting wave 5, which means, let's see if we get an overlap here. So what did we say? 1, 2, 3, 4, 1, 2, 3, 4, 5. Not even, might not be fully, but let's assume that for now. Then that would be our wave 3, 1, 2, 3, 4, 5 with a truncated 5th wave. And then we would get our target area here, which would overlap with 31.22 to 31.81. Yeah, so which would be the 561. So let's remove all the other ones to remove the distractions. So the way this might play out is that our third wave right now would finish up here. Then from here-ish, we would be retracing this entire move. So which means from here we would be retracing potentially down to 26. And then we get our 5th wave that then basically brings us at least again to 33 to finish this third wave. Although higher, most likely, once we put the targets on the map. Yeah. And yeah, so the only question would be, so again, like here so based on Kennedy channeling technique, we do not have a break to the bottom. So candle that closes outside here, which means it indicates we haven't finished the third wave. And then here we also don't have it yet. So it means there should be potentially more room up to reach the 31.22. So that doesn't change the fact, however, that there could still be in this subwave here, that we could still already have 1, 2, 3, 4, so that we go a little bit further down before we get a wave 5 push. Yeah, I'm not saying that it's likely, but the point is, this is not a guarantee that from here we don't drop a couple of dollars. That's just basically the pattern that would suggest that this 5-wave move, which again consists of 1 up, 2 down, 3 up, 4 down, 5 up, should take us into this area, because we have 2 different forecasting methods here that overlap in that area. One is based on the expansion to that of wave 1 that gives us a wave 3 target area, and the other one is based on the extension of wave 1, and the other one is based on the expansion of what we believe to be wave 3, 4 to get the target area for wave 5. Now we'll see. We're gonna remove a few things again, and we are going to so that channel is still live, so we keep it on the chart for now. The base channel we keep also on the chart for now, and we're gonna go on to an hourly chart, and it's gonna get a little bit more cluttered maybe. And we're again going to use Kennedy channeling technique to see if maybe or how we can confirm that. So here we have the same situation. So we have our base channel, and then we have a breakout which points towards a acceleration channel, which points towards we're in the third wave. Now we take whatever high point we have, we take the point 1 and we make a parallel through our point 2. And if we have a breakout to the bottom, we know we're supposedly in wave 4. Now that doesn't happen here, so we move it further. And then we actually get here, and then here we get our breakout to the bottom, which points towards now we are in wave 4. And then our wave 4 ends here, and that's our point 2 and a parallel through point 3. And then we expect that wave 5 actually hits the median or the top, and it hits the top here. Okay, so which would indicate actually that I was slightly off with my labeling here, because let's also double check this real quick, 1 second. So extension. Yeah, we bounce at the 361.8. So we leave everything, we remove everything but the 300 levels. So which kind of would confirm, so if we wave 1, wave 2, wave 3 bounces at 361.8, wave 4, and our wave 5 would then hit here. Okay, so which then again means, and then we retrace. How much do we retrace here? Do we hit one of our usual levels or not? We retrace 38.2%. No, we actually retrace more. We retrace 50%, almost 61.8. Yeah, but so, and our, I didn't notice. Oh no, not here, but let's bring the base channel back. Just 1 second, the smaller one. We didn't check that, but just to, yeah, we almost touched the top of the base channel as well. So there are a few things that point towards that, which means again that we also would have finished basically wave 1. And now I'll have to drag the rest around. Sorry. 2, yeah. So that would be wave 1. Is 2 then, or 2 has to be finished, because otherwise the whole thing doesn't make sense. Yeah. So 2 would be finished here, but that would be quite radical and short. 2 might more likely be actually this one. So, and there we have then what, the 38.2 retracement or not? Yeah, so 38.2. Yeah, I'm not sure if that is a fluke here, if we actually rallied down that far or not. So, but for now we assume it's a fluke. And which then means there we don't have any of those levels, so do we? So let's get 1 second. Let's get the where do you come from? So here we have that, and that's actually the one I'm looking for. Okay, so extension. How high did we get here? 2879. Okay, we might, it's a little bit tricky, but it might be the 400% level, so we might not go for the 500 in this case. But then in this case, we would need to, yeah, now I don't want to delete the yellow ones, no. So because then the assumption would be, where's the red ones? There, that this is actually wave 3. Then we have our wave 4 till here. We have our breakout, and then we get a new destination channel. Destination, 0.2, 0.4, parallel through 0.3. So we would expect to hit any of those. And then, now where is our wave 5 target? Right now it's here. Okay, let's drag this out a little bit. We already hit the top or the median here. So although we would need a 5-wave move from here moving forward, and that would likely only be wave 1, 2. And then we're again in the third wave. God, that's like so many third waves in the third waves in the third wave, which points just toward very strong potential movement. That kind of checks out. We have third wave is not the short, so it follows all the rules and guideline or rules, yeah. So, and it also hits our, in quotes, some of our usual levels. I'm not 100% happy with this one, because I can imagine that this is 1, 2, 3, 4, and then 5. But if that were the case, 1, 2, 3, 4, then the 5th wave would just be so much bigger than the previous ones. then I'd rather, then it's more likely that I made a mistake here, and that instead of 1, 2, 3, 4, 5, it actually is 1, 2, 3, 4, 5 for wave 1, 2, and then we would be in this third wave, where we have 1, 2, 3, 4, and now wave 5. So we're gonna get rid of some of the final labeling here, because we have to consider the option that I'm wrong. Yeah. So here we actually want to add back a few. So we don't need the 400. So everything below 400 can go for now already, but everything above can stay on the chart, because I believe, so if I'm wrong with this assumption, then we would actually expect to hit this level here in this move. And then after we hit this level, Fibonacci retracement, after we hit this level, we would then still retrace back to 26.82, or at least like to 29 point something. So I feel for my option, it's actually not too bad. So can I now rename? So wait, if I have to check how I can make this my primary analysis, yeah. But I feel, I said, for my option, I feel that's not too bad. So even though I called it wrong and thought this would be wave 5 and we get A, B, C, I think that even if we now only get a small correction, so we would go down to 27 point something and then get another push up, which means tomorrow we might close above 30, considering that right now we're looking at an hourly chart. For my options, it might not be as bleak as I thought it would, because we would have the move up to 31.22 to 31.81, which also, sorry for the long back and forth. Now, where's my prediction sheet? I closed it by mistake. Great. Forecast? No, what's it called? Like stock predictions. There we go. So for GameStop, we can update our prediction to 31.22, 31.81, if we don't already have exactly that value in our prediction sheet. I'm loading it right now. So GameStop, we have 32.60 and 33.81. Okay, so we're kind of like reducing it a little. No, we actually, no, you can keep, never mind, keep it. So that's based on the bigger pattern, 32.60 and 33.81. But on the smaller scale, we should first potentially hit this level here. So 31.22 to 31.81. So no need to update it, right? And then from there, we would get our next retracement. And then we get the move into this area and we get another retracement. Obviously, there could be strong moves that break one of those levels, and then basically it means the next target area becomes relevant. But from what the pattern shows, those would be the next relevant target areas, which means for my options, while we go above 30 and we might even tomorrow close above 30, it's unlikely that, I mean, not impossible, but it's unlikely that just because we're $1 above 30, somebody is going to execute the covered calls that I have, which means then that next week we should potentially retrace further. The retracement should take a little bit of time, and then actually my option should be saved. Now we switch to a daily chart again and we get a huge mess. Okay, daily is maybe not good enough. 4-hour chart. Okay, 4-hour chart works acceptably enough. And zoom in a little bit. And yeah, so that much about GameStop. I know the whole episode was, or the whole stream so far was mostly focused on GameStop. It's going to be interesting to see. I would love to see my call options expire worthless, because then I can just pocket the premium. We have 600 shares, out of which, I don't know, 400 or actually 700, because from the ones we bought recently, 100 also went to computer share. And most of them are paid for with options premium, so not even with my own money, in quotes. Yeah, I mean, with money that I earned from selling or writing options. So I would like, obviously, to have that. But even if we go higher, so if we break the 30 and my shares get called away, then I just free up my cash, and I can then, on the other hand, sell short-dated cash-secured puts again, which, as we see, I mean, one day is a little short, but for a week, we can see that at the money, it's like $130 or $100 to $130. So I could then also, for potentially, depending on the implied volatility and so on, realize $500 to $600, which is 3 to 4% return in like 7 to 9 days. and if it then drops, get the shares assigned again, potentially depending on where we go and how it moves, potentially lower than how it's going right now. Yeah, so while it was a long time spent now on just labeling the GameStop chart, I have to say that I actually feel better that we did it. So I clearly got something wrong here in my assumption that this is like wave 3 finished, or at least I believe I got it wrong. There's still the small chance that this is a flat correction. However, flat corrections happen, it's kind of like a 50-50 chance. So it's like whenever, so in a second wave, the flat correction happens 40% of the time, and the regular ABC zigzag 42%. And then there is 8%. So the rest of the percentage are basically combinations and stuff like that. And in wave 4, which we could assume, or which would be possible that this is wave 3 and 4, flat corrections happen 48% of the time, and zigzags only 32% of the time. And the rest, again, is a combination of other, or a combination of corrective patterns. Let's actually ask the 8-ball. How do we phrase that? Well, actually, will GameStop retrace right now? So with the meaning, will it retrace here, or will we first get the push up? So so will GameStop or start its retracement right now? Now, come on, outlook not so good. So the 8-ball also thinks that we are likely getting a push further up. For something that gives random outcomes, it's surprisingly often that it actually shares my opinion. It's kind of scary at some point. But yeah, so I believe, based on the updated labeling, that I called it wrong here. While it's still a little bit hard to decide if that third wave push finished here and we actually have wave 4 and only wave 5, which would still give us a higher target here, or if we are still within that third wave, although it would need to be 1, 2, 3, 4, 5. So 3, again, taking us then to, do I now have only one level here on the chart? No, 1, 2. Oh, no, there was 1, 2. And then we don't even have on the chart right now. So, but that would actually give us higher targets. And the only other option, so if you're wondering how to know or how to confirm, basically, if we break the low here at 27.16, then it's highly likely that we basically finish the pattern here and are currently getting a bigger ABC corrective pattern already down. That would then point towards 25, considering how this retracement terminated here, if we consider that candle in quotes as a fluke. But for us, we'll stay on the 4-hour chart. We're going to keep an eye on it every stream. Today, my portfolio will obviously then, in quotes, be in the red because the shares lose in value. Whereas on the other hand, my $30 calls that expire in January will potentially move into profit. I will not roll them further out because 40 days is already far out enough. To be fair, I should have been less greedy and settled for less premium, and instead of the $30 calls, maybe go for 35 or so. But I'm really, I don't know, guesstimating that if this here is 1, 2, 3, then wave 4 should also drag down out a little bit. And then wave 5 until we go above 30 again should actually still take some time. So I didn't want to zoom out that far, but like this. So, and in that case, it actually makes sense to have the $30 call because that's where I got their shares assigned at in the first place. So I make sure that if they get called away, they don't get called away at the loss. And on the other hand, right now it still offers higher premium. Obviously, if I would have expected that we'll get another push up, I could have waited and realized up to $400 more in premium. But at the end of the day, we're up like 60% this last half year alone. So in this portfolio, since I switched to Interactive Broker, so definitely nothing to complain about. So either way, the worst case that could happen for my portfolio is actually for GameStop to plummet down. But considering all the premium we earned, even at $20 or so, we would still be at the profit for this year. So below 20, it then might become tricky. I might have then to run the math. Actually, we could retrace further. So we are now we have 15,300 net liquidity. So at the current point, okay, that's then 13,000. So around 20, Oh no, 19 also works. So we would still be break even at around 19, yeah, if that happens. I don't see it happening based on the push that we got here. Yeah, there is still the small chance that this is only part of a free wave corrective move before we go further down, but I don't see how, to be honest. So yeah. Anyway, that's then it for today. It's going to be interesting to see what happens for the rest of today and tomorrow, and how GameStop opens on Monday, to basically get a little bit more confirmation. As you can see, Elliott Wave Theory relies on the candles that you have on the chart, which means every new candle that finishes gives you potentially a bit more information to confirm a pattern or declare it invalid. And however, it still provides you with quite often enough accurate forecasting models. At least I'm doing quite fine for myself trading with Elliott Wave Theory. So feel free, again, follow the link in the description. You can read the book online for free, and if you like it, you can get yourself a physical copy as well. But that's it for today. Tomorrow we'll try to look a little bit closer at a few other things as well again. And therefore, I'll wish you all a pleasant rest of the day and successful trades, or may the markets move in your favor. Unless you're betting against my positions, then not. And then see you all hopefully tomorrow around 5 minutes before market open again for another episode of Daily Market Mastery. And last but not least, again, the reminder, don't forget, like, subscribe, enable notifications so you don't miss out on those future streams. And thanks for stopping by. Till tomorrow. Bye-bye. Thanks, Rai, for being here. Thanks, Akashi. You're not gonna bet against me, I know, against Sitter. By the way, Akashi, before you leave, so just as a heads up, finally got to record 2 new videos for the main channel, so about B Network and High Dollar. B Network video goes live tomorrow, if I'm not mistaken, and the High Dollar video then probably in a week or a couple days later. So feels nice to be back in publishing, and I hope you enjoy them. Anyway, have a great day, guys. See you then. Bye.